Hi, good evening. Thank you for joining another session of Forex Trading Analysis. My name is Olamide Olayemi. Okay, for those that usually follow the daily trading signals, so it's another time at which we'll be looking at the Forex market and the possibility of taking a trade. Okay, so today is the last trading day for the week, and then we have some trade to take, but before then I want us to just do some little lesson or just a recap on some of the patterns. The reason why we do this is it's always good to know more about what is happening and then why we are taking that trade. Although you should put at the back of your mind that there is nobody that knows the forex market perfectly. So that's one thing you should always know. But at the same time, you can also be much better in it as time goes on. Okay, so tonight I want us to look at the pin bar and then why we trade the pin bar as a candlestick pattern. All right, so but before we take that or go any further, I would like to just say the disclaimer as well. So the disclaimer is this material is provided as a general marketing and training communication for information purposes only and does not constitute an independent investment research. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee of future performances. Viewers acknowledge that any investment in leveraged product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high risk for which the viewers are solely responsible and liable. We assume no liability for any loss arising from any such. Risk one in trading forex may not be suited for all investors as they carry a high degree of risk to your capital. All right, so let's go into the short training for tonight. It's not going to be more than 5 to 10 minutes before we take the trade. All right, so we want to say some things concerning the pin bar. The pin bar is a good way, is a good candlestick pattern. What does the pin bar really uh, tells us in any trade or in any currency pair or in any that asset? Is only trying to tell us that initially either the bull or the bearish were in charge of the market, and then when they were in charge of the market, they were very strong. They moved the market, and then the other party was not able to easily take it from them while they were moving the market. So, but before the end of the time frame, either 24 hours or 5 minutes or so, there was a change, and then the other party took over the strength and then push back from where the earlier party started with and pushed back to either almost the opening price or further than the opening price. So when such happens, it means that the other party is now in charge of the market. So that's the meaning of the pin bar. Someone was in charge, then the other party took over and then pushed back all the strength at which the former party had used. So and they recovered or almost recovered from the initial party what he has gained. So that's something about pin bar, and then it's trying to tell us that there's likely going to be a um, turning movement in the market. So what does that mean? If it was the buyers that were pushing the market, then the next candlestick is likely going to go in the direction of the pin bar, because the person that last held the power is still in charge and can still do more as of that time before the initial party takes over again. So the pin bar is just telling you that follow the hammer, follow the head, and then see what happens using the pattern, and also using some other technical analysis indicators, using some other indicators to confirm your forecast before you go or dive into it. So the pin bar is always good, but when you take the pin bar, you must also know that the other party might want to take charge of the market. So but you also need to be careful. So but it's always a turning moment most of the time. If we look at past events, let's look at this chart and then look at some pin bars that has happened in the past. Okay, so we just use this as an illustration. So okay, let me use the trading view as an illustration. Okay, so if you look at, I'm going to change this to the trading view so that you can see the trading view. It shows pin bar much more better. All right, so if you look at this right now, you will see that whenever there is a pin bar like this is a pin bar. So whenever there is a pin bar like this, it's trying to tell you that the market is likely going to continue going down or in the opposite direction. So like this, you can see where once this happened and the market went up, the next current candlestick, but at the end of the day it pushed it back. So look at this, likely this too, you can see when this pin bar showed, it pushed it back. So if you look at series of pin bars, this another one. So if you look at these also, you can see this is in a downward trend. If you look at this trend, this is a downward trend. You can see it's in a downward trend. So you must also look at the trend to ascertain your pin bar, what it's telling you. Okay, look at this pin bar. It's trying to tell us that the bulls are in charge, that is going to continue going up. But if you look at the initial trend of the market, it's coming down, and then this has also be going up. So it's trying to tell you that if supposing the pin bar started there, this is another pin bar, you can see this, it said it's going to go up and then it went up, but at this stage it's likely not going to work. So if you are taking the upward movement trade, you might have been wrong, or you might have lost money for some time. You understand my point? So that's why you must first of all look at the trend at which you are, and then what is telling you. Okay, look at this pin bar right now. It's telling us that the bearish are still going to be in charge, and then you can see what happened, and they still came down. So that is how pin bars run. Okay, this is a smaller one. This is another pin bar. So it's telling us that the buyers won't be in charge again, but the sellers will be in charge. You can see, and then it dropped after a while. Likewise, this, if you look at this now, if you look at this pin bar is telling us that the sellers are going to be in charge, are likely going to be in charge. But if you look at the previous candlestick and where the pin bar is standing, it's already on a higher low. You can see it's already on it. So you might not want to take this as a confirmation because it's already on a higher low. So you don't want to use it. You want it to first of all go back up, and then if the pin bar shows at the top, then you can respect the pin bar. But if it's already on the trend line or already on the support level in an upward movement, then you won't want to take it as a sure or recognize. Okay, look at this right now. This is in an upward trend, but look at the pin bar. It's coming, it's showing, it's already touching the resistance level of the trend line, so which is telling us that it's going to drop. So and then you can see what happened. The trend, the market went in that direction of it. This another pin bar too. So you can see this saying that the market is going to still drop, and then it dropped a little, but when it touched this trend line, it started going back up, which is the higher low. So it started going back up and it attained the another higher high here. So but look at this right now. There's a pin bar at this level at the trend line when it has already come up. So the pin bar is telling you that the market is still going to go up. but it might still go up after a long period of time. But right now it has already touched the trend line or the new support and the resistance level. So you might not want to enter as of that time. You can see because already it's not likely going to continue going. So it went down. So but if the pin bar was on a support level, then you can respect it more. So pin bars are good, but you also need to identify where it's coming from. Okay, this is another pin bar here. This is another pin bar here, but where is it standing? It's standing on the support level already in an upward trend. So you might not want to respect that pin bar. But if you look at this is sitting on the support level, telling you that it's going to go up. So you will respect this more than this. So what am I trying to say here is that pin bar are good. You can use it to checkmate or confirm your forecast with some other indicators, but you shouldn't use it only to decide your entry. So you must check where it's sitting on. If it's sitting on the support, then if it's a bullish pin bar, then you can respect it. If it's sitting on the resistance level, if it's a bearish pin bar, then you can respect it. So you need to know this, and also you can also still use another indicator to check and to be sure, and also check for some news, which is the fundamental aspect of it, that currency pair or that asset. What's happening? Is there some issue in the market and things like that before you decide to go into it? So all right, so that will be the little we'll look at for pin bars. If you want to know more, then you might need to go for the full training of patterns, which I already have in my archive, and then you can learn more on it rather than just getting some hints. Don't forget this, we don't have so much time to waste as of this time, so we are only taking hints and then going to the trade directly. All right, so now we want to look at trade to say, okay, yesterday we took the excuse me, we took the GBP AUD. Sorry, okay, so we took the GBP AUD, and then if you look at what happened, we took a buy trade due to this pin bar that we saw. We took a buy trade, and then see what happened. The bearish were in charge at the end of the day. You know what happened? A lot has been happening in the UK as of now. The drivers, the truck drivers that Brexit is affecting and all those things. So it's dropping the price. But initially, although the price of oil went up to as high as $200 per barrel today, so which really affected it. But if you look at what happened, we said it was going to go up. It went up. The price increased to some little aspect, and then there was a time it was dropping to over 70 pips, about 80 pips or so against our prediction. So, and then this is where trading stop comes in. So earlier I set the trading stop to about, let's say, to about 150 or 100 points. Then when I saw that it was in high negative, and then it wasn't really doing because of the news, I went back and reduced the trading stop to just 50 points. So in the course of the day, the price went from the negative to the positive, but it was not able to go very high. So immediately I was already in the positive side of it. So it did that trading stop work by getting me out of the negative, and then I was only able to get some little profit before it dropped. And then when it was dropping again, it already exits me from the market. It closed the trade automatically. But the good thing was that I was earlier in high negative. I waited for it to get back, and then I was able to get a little profit, and then I got exited by the trading stop. So if not for the trading stop, this is what would have happened today. I was earlier in negative, far negative, then it came to positive. It didn't touch, it likely didn't touch my take profit, then it came back again into negative, then I will end up being in negative as of now. So you understand what happened. So for those people that have not yet seen the advantage of using a trailing stop, so I'm trying to let you know that it's good, and then it has a lot of advantage, despite the fact that you might not be able to profit as much as you want. So but the most important thing in forex trading is, first of all, retain your capital. If you are losing your capital, don't blow it. So retain it and then recover with time. So because if you can recover, if you can keep it, it's just a matter of time. You'll be able to recover, and once you recover, you would have been able to cross the hurdle of the loss, and then you'll be able to be profitable. But if you are not able to sustain yourself during this time, then that's where you end up losing your old fund, and then due to the fact that you got distracted and then some things happen. So all right, so like tomorrow I might just be discussing some other things that are related to the psychological part of trading. All right, so we want to look at some trade. We've been able to see some trades that are looking interesting. We might need to just look at it, and then with the hopes, like we have the Canadian dollar against the Japanese yen. If you look at it initially, the Canadian dollar, if you look at it from a long time frame, you will see it was earlier in an upward movement. Then after some time, around May, it changed to a downward movement. So since May till now, it has been in a downward movement. If we zoom out again, we'll see the trend. You can see that it was in an upward, and then right now it's not, it has been downward. So we are following the downward movement as of now. So with this right now, there is a pattern that we've seen, the candlestick pattern that we've seen, that we want to work with. So which is the pin bar. This is a pin bar, or you can also call it this kind of pin bar. You can also call it the gravestone doji. You understand? So but it's also a pin bar. So it's telling us that we have gotten to a new resistance level, and there's the likelihood that the price is going to drop. The price is going to drop. So if you look at what happened there, it also happened. So they are fighting who takes charge of the market. So but this has always been a downward trend for some months right now, which is April, May, June, July, August, September. So for about 4 to 5 months, it has been in a downward trend. So we can respect it that it's in a downward movement for some time right now. So, and if you also look at the MFI, which is the money flow index, the money flow index is also telling us that it has been overbought. So it's already past the 80 line. Yesterday we discussed something about the MFI, so you might try to check the previous video if you want to know more about it, so for information's sake. So it has passed the 80, so which is telling you that it's already oversold. So I mean overbought, is already overbought, so it's likely going to start dropping. So with this pin bar, which is telling us that to sell, and also the MFI, which is telling us is already overbought. So we want to attempt to go in the trend, with the trend. We want to attempt to go in the trend, which is a sell trade, that the Japanese yen will gain momentum or will appreciate against the Canadian dollar. So that's the meaning of what we are trying to look at here. All right, so that's going to be a sell trade because of what we've seen, the resistance level, the pin bar facing down, the MFI that is also telling us to that is overbought, and also the trend of the market, which is a downward trend. So we have about 4 things that we are indicators that we are using to ascertain our decision. So now we also have another one, which is the AUD JPY as well. If you look at it also, it has also been in a downward trend for some time, and then a similar occurrence is happening here too, so which is also telling us this is a pin bar also coming out here, which is telling us that it has reached it and is likely going to drop. If you look at this MFY as well, it's telling us that it is past the overbought level, that is likely that it's going to start coming down. The previous events like this had earlier happened. So if you look at August, in August we had something like this when it got here, and then it's telling us that it has been overbought, so it started dropping. So it's just a matter of you deciding and then knowing that, okay, my decision is likely going to be correct without any fear. So that this also is a sell trade, and then we expect it to go in this direction in the course of the day. All right, so this is a sell trade. The AUD JPY is likely going to be a sell trade, which is the Japanese. We expect the Japanese yen to appreciate against the Australian dollar, and we also expect it to appreciate against the Canadian dollar. All right, so those are the two that we want to consider a sell trade, with the hope of a successful trading and profitable trading period. Don't forget, we are forecasting while we expect the best to come out of it. So you can also use your trailing stop to also assist you in your trading, to safeguard your positive position when you enter the positive position, and then it should help you to manage it. All right, if you don't have a trading stops server, you can contact me, and then I'll give you information on how to go about that. I've earlier told you that a trading stop system, you need to have consistent internet 24/7, and the computer need to be on and up and running 24/7. It cannot work on the phone. It has to be a computer system that is set to run 24/7 without electrical interruption. All right, so that will be all for tonight. I want to say one more thing, which is, if you have not liked our page, and please, if you like this video, give it a thumbs up, and then please subscribe, and then you can activate the bell so that you can get notification when we are up and running. So please just like it, and you can share it, and then you can subscribe to it and things like that. So it helps us to get more attraction from people. We are trying to grow naturally, so because we believe in what we are doing. All right, so that will be all for tonight. Thank you for joining. My name is Olamide Olayemi again. Have a lovely trading session.